Hello, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 14th of September. I hope you all had a great trading week, and getting into the week ahead news straight away. So this is from tradingeconomics.com. And it says monetary policy decisions will be the focus next week as monetary authorities face uncertainty on growth, debt, and trade flows. The Federal Reserve will headline policy decisions and update its summary of economic projections. Decisions for G10 members also include the Bank of Japan, the Bank of England, and the Bank of Canada. Meanwhile, officials from the US and China will meet to continue discussing trade relations. On the data front, US retail sales and industrial production will update investors' views on consumer strength and how industries react to tariffs. Inflation rates are due from the UK, Canada, and Japan, while trade data is expected from the Eurozone, Japan, and Australia. Lastly, China's monthly data dump will offer updates on Asia's largest economy. So, a few things going on. I think the inflation data will definitely, and it always does, really play a key part in central banks' decisions to whether they're going to cut, hold, or hike, and how much by. So, yeah, watch out for that inflation data and, of course, the economic data. So, looking at risk sentiment, and risk sentiment is always important to look across the markets as to where money is flowing into and out of, and we can see really from the VIX. The VIX is the volatility index, but it's also a measure of risk off and risk on sentiment. At the moment, we're below 20, which is kind of seen as a line in the sand when it comes to risk on and risk off, and below 20 is seen as more risk on, where investors are looking for yield return on investments, putting their money into higher yielding assets. And you can see that kind of correlated with the stock market, right? Stock market making new highs, continues to grind higher, catching a lot of traders offside, whoever's going short. Dragging them and their accounts into hell. So, yeah, that's kind of, confirming really that traders are looking for a return and not necessarily looking to put their money into safe haven plays, right? Being more defensive. Now, traders, again, will look at gold and say, well, what's happening with gold? And gold going higher, and although gold is typically a safe haven asset, it's more I think this is more of a function of dollar weakness rather than any kind of major risk off sentiment, right? There's always going to be concerns from the market, things like uncertainty around trade, and there's political uncertainty as well in France and in Japan. But ultimately, I think gold against the dollar is rising due to more of the fact that there's weak dollar, and yields are kind of reflecting that, right? 2-year treasury yields going lower. Treasury yields are a reflection really of investor confidence, but mainly where the bond market thinks interest rates are likely going, right? Whether they're going higher or lower, or remaining the same, right? But we can see over the past, if we click on the last month's data, we can see, one sec, let me just refresh the page. 1 second, don't know why it's doing that, but yeah, right. So when we refresh the page, go to the monthly, we can see over the last month, you can see that we've been in this more downtrending environment, as expectations for a rate cuts continue. If we look at the last 3 months, you can see again we've pretty much been moving to the downside, right? Volatility index is running low. Last quarter, the S&P has been going higher, and of course the gold is kind of broken out to the upside based on dollar weakness. So overall, I think we're in an environment where I want to look for yield differentials. So whether central banks are hiking, holding, or cutting, most central banks are holding or cutting rates. Inflation is quite on the low side; they've reached their target. So that's really where you're looking at from a risk off perspective. You would kind of go into either the yen or the Swiss franc, preferably the Swiss franc, but I don't think although you can buy the Swiss franc, I think really the main plays are higher yielding currencies like the euro, as well as the Australian dollar. I won't get into the Australian dollar in this video, but if you are a member, you can basically go to the Discords. Of course, you're already in the Discord channel. So what you do is you go to the trading videos channel, click on that, click on the link here, enter the password, and then it takes you to this channel. And this is where I've got all the videos that I upload. It's all here, all archived. So I've got the members analysis right here, 13th of September, which goes into the commodity currencies as well as the Swiss franc, as well as the week's videos, right? So you've got a few videos here. Group call is where there's that Euro New Zealand trade I was talking about, and I'll get into that as well later on in this video. So yeah, so from a risk sentiment perspective, really going for the central banks that are not hiking rates, sorry, not cutting rates, and the against and selling really the central banks that are looking to cut rates like the US dollar. So also as well, that's backed up by just quickly looking at the front pages of Bloomberg and the Financial Times. So in terms of risk sentiment, you want to see a central theme. If the front pages are all focused on one theme, then that's really where you're probably going to get more risk off sentiment. If there's different stories on the front pages of, for example, Bloomberg, the Financial Times, and Reuters, then it's likely that you're probably a bit more in a risk on environment. The news is there to obviously for clicks and to get you to kind of click on their articles. But in terms of risk off perspective, if the stock market is crashing, then you'll typically tend to have, or there's maybe some sort of trade dispute that the market is worried about. Typically, you'll have that on the front pages of all of the financial publications and news publications. But if you have basically different stories that don't really affect the market, then of course that kind of backs up why you wanted the VIX is on the low side and the S&P is on the high side. So looking at the dollar index, and the dollar index, again, been saying this for a while, right? The dollar is really on this, I think, is a sell. Kind of broke through technically this demand zone. I'm actually going to remove this now. Don't think it's really worth having on there. The path of least resistance continues to be to the downside. In terms of the currency summary report, we can see that really the amount of central bank policy cuts is pretty much 70 basis points, 100% probability of a rate cut at the upcoming meeting. You can see here on the FedWatch tool that you've got the probabilities of an ease is pretty much 100%. That's so basically the rate cut has been priced in. Where the market typically will tend to move a bit more on the day and the announcement of cuts is whether the central bank is more hawkish or dovish, and if there are any surprises, and whatever hasn't been priced in. So if the Fed come out and they indicate that they could be cutting more, then of course the market will price that in, and you'll probably see maybe a bit of a drop. Don't be surprised if on the day of the rate cut that the market kind of pulls back a little bit. For me, that's fine. In fact, I want that to happen because then I can get shorter at better levels, right? So with that, I'm really more of on the short side. But reading just basically the summary. In terms of the jobs, we had applications for US unemployment benefits jumped last week to the highest level in almost 4 years, indicating layoff activity may be on the rise amid a sharp slowdown in hiring. What Bloomberg Economics says, the surge in initial jobless claims in the first week of September came primarily from Texas, while claims declined in most areas. While any deterioration in the labor market bears watching, given growing labor market weakness, a broader increase in claims would have been much more concerning. Thursday's figures mark the final read on the state of the US labor market ahead of the Federal Reserve's September 16th to 17th policy meeting. The central bank is widely expected to resume interest rate cuts amid building concern about employment after keeping rates on hold so far this year to guard against inflation risks. So looking at the dollar, Right, I think the path of this resistance is still to the downside. Whether it goes down like this, I'm not looking to sell at lows, but if it does go to the downside, then that should create a supply zone here, and then just I'm waiting for a pullback to the upside before going short. If not, and it goes to the upside this week, then I'll just look for a short trade here. So either way, that's really the play. Looking at the euro, and the euro at the moment looking decent for a buy, pulled back. I am in the euro New Zealand trade, and I'll get into that a bit later. Breakdown of that. So prices pulled back. The euro really is, I guess, strengthening based on the fact that the ECB came out this week, and they are not, or last week I should say, and they are not looking to cut. They were actually quite hawkish. So it says here, Lagarde says disinflationary process over for euro area. ECB leaves rates unchanged as expected. Lagarde says risk to economic growth more balance. Says disinflationary process now over for euro area. Traders pair easing bets indicate rate cut cycle over. The ECB signaling the end of cuts while the Fed prepares to ease creates relative yield support for the euro. So there's a divergence going on there. One central bank is cutting, the other one is holding rates. And market pricing suggests confidence in ECB stability. There is French political risk, is noted, but bond spreads and FX reaction remain contained. So that is a risk to buying the euro, but it looks like the market really is looking past it. So yeah, I think the euro is more of a buy, both fundamentally as well as from the fact that the euro and the dollar move typically in opposite directions, and if the dollar is moving to the downside, then that should push the euro higher. So there was an opportunity to buy the euro as it pulled back into this demand zone. And if you missed out, I think there's probably still an opportunity, but you're not going to get in at the best prices right down here. So yeah, the euro for me continues to be a buy. The yen was an interesting one. Still managed to make some money on the yen, a 1-to-1 trade, and again I'll go over that in the trade update. It did gap up. I was expecting it to on the weekend. We spoke about it last week's analysis, where I think Ishiba stepped down, forced out, and so I was expecting some sort of volatility. Came close to a break-even trade, but luckily ended up making profit on that trade, and I'll go over that again. But I thought that there would probably be more downside for the yen as there is political uncertainty. The yen, in terms of summaries, though, there is some positivity around it. It says here, hedge funds added to bullish option wagers on the Japanese yen Tuesday following news the Bank of Japan officials were open to the idea of raising interest rates again this year, despite the political instability. The Bank of Japan headline puts rate hikes back on the table and has spurred renewed interest from hedge funds for a stronger yen by buying put options on other currencies, including the dollar against the yen, said Sagar Sambrani, a senior foreign exchange options trader at Nomura International PLC in London. The yen had come under pressure at the start of the week following the news over the weekend that Prime Minister Shigeru Ishiba said he'll step down following weeks of calls for his departure. There are worries that his successor may adopt a less fiscally disciplined approach, adding to the nation's debt levels. But now traders' attention has turned back to the Bank of Japan interest rate stance. With its next policy meeting next week, markets have quickly pivoted from talks last week of dollar yen above 150 on PM Ishiba's resignation to now targeting the spot below the 145 by the end of this week, Sambrini said. So a bit of a reversal in fortunes over the last week, up to the down to the upside. So if you are a buyer of the yen and want to follow along with the hedge funds, remember that hedge funds don't have tight stops of maybe 10-15 pips. Maybe they do on some of their algos and stuff like that, but ultimately just because it says that they're long doesn't mean that the market's going to go to the upside straight away. Of course, hedge funds have many different strategies, but ultimately I think the yen is a tricky trade. I do think that there's probably some upside potential if they can sort out their political situation, but who knows what price will do in the short term. The price was a bargain down at these prices back in July, right? And then prices went to the upside, but back down into this bargain price. And like I said, if I think the political instability is what's keeping this suppressed, but I do think that the yen may start to be a buy in over the coming weeks. But I think again, I'd rather wait for either some data or for the market to kind of look past the political situation before looking at going long. So the yen, I'm kind of staying out of it for now. But if you do want to be a buyer of the yen, it is at a nice level. I think a bit lower would be preferable if I was looking to buy this now. Any kind of stop hunt type trade around there. But yeah, overall, I'm staying out of the yen for now. I think there's some better pairs out there. And then we have the pound, and the pound. Technically, I think it's decent for a sell. I was saying to the guys in the group, I think I'm leaning towards sells. Reason being is because of the upcoming budget responsibilities. I don't think our Labour government is handling the economy well, and their new budget I think is going to put pressure on the economy and probably contract the economy, but it doesn't mean that in the short term prices can't go higher. So if prices do go higher, I'm still going to look for short trades to the downside, because as I said, as we get closer to that fiscal budget in November, I think risks are going to show their head. So, or the risk off market. So, in the short term, I do think that, of course, there is definitely supportive data for the pound. The Bank of England not cutting rates, looking to hold rates. Not really much cuts for the rest of the year. I think there's probably somewhere in the region of maybe. Where was it now? Maybe about 10 basis points and a 97% probability of a hold at the upcoming meeting. Yeah, it says here that the reaction to gilt's sell-off looks overblown. The pound has had a rough Tuesday, so that was last week Tuesday on the back end of the gilts. Ultimately, this was from ING. It says here that we're not optimistic on the pound, as we still expect the Bank of England to cut rates by the year end, but the move in back end gilts don't seem dysfunctional and don't justify a persistent risk premium on sterling, especially given the UK government's likely fiscal consolidation plan. So ultimately, I mean, there are reasons to buy the pound, of course, in the short term. Supportive being rate holds, but I do think that risk event coming up with the budget and the economy is likely to make the pound a sell. So I'm going to I'm waiting for maybe the pound to go drift a little bit higher this week before looking for sells after the Bank of England have their announcement this week. So going back through the analysis, for me, the dollar is a sell on pullbacks. The euro is a buy on pullbacks. The yen I'm not really trading, and the pound I'm looking more for a sell bias. Although I could definitely understand why traders, if prices do come down to this area here, you can look for the potential buy on the pound, but my bias is more to the downside. So when we're looking at the pairs, it's easy to kind of match up and pick the pairs that you want to trade. The euro dollar should really be a buy. Again, it's grinding higher. Got to wait for a bit more of a pullback to look for some long trades. Nothing really much to say about that. The dollar yen, again, is a bit of no man's land in between this high and this low. It does look like, though, again, if Japan can sort out the political situation, I think the path of least resistance should probably be more to the downside. And again, that's kind of providing that the data is supporting more rate cuts for the dollar as well, for the Fed. So I think if prices do move up there, that would be really the short trade. But I'm staying out of this pair for now. Pound dollar, I do think the pound has the edge, although both are sells for me. I think the pound definitely has the edge fundamentally, but again, not really a pair that I'm looking to trade. But if you are, you can look for pullbacks into either, this demand zone here. I think that's still a bit too pricey. Anything down at the 31344 area would be a buy. for me technically. But again, I'm not really looking to take this pair. There is, for those of you who know how to trade stop hunts, there is a very nice level around here. Stop hunt level has been touched several times. So if you get a stop hunt around here above this level, that should be nice for a potential sell trade. The euro pound, I'm interested in this pair. I think that over the medium term, the euro should have a bit more of an edge. I think if there are pullbacks, the euro gets weaker against the pound and comes somewhere down here. I think this is going to be a bit of a buy. I'm interested anyway, but of course it will depend on what happens at the time with the data. But with the market looking past the French elections, and they're more worried about the fiscal issues and the budget for the UK, I think that this is probably more of a buy again as we get closer to the November budget and deadline. The euro yen, I would say the euro definitely has more of the edge, although this isn't necessarily on my radar. I think there are weaker currencies than to sell the yen. If you are looking to buy this, then if you're day trading, maybe down into that zone. If you're trading a bit like me, then I would want a deeper pullback before looking at going long. Or if prices go to the upside, make new highs, then I would look for a pullback into that zone before going long. But again, it's not really on my radar of pairs to trade. And then the pound yen, and I think this will probably come on my radar at some point. Not for now. I do like this level. I really do like this level for a short, but not really my cup of tea in terms of the pair. Too much uncertainty around the yen, but I do like this for a sell. Again, for anyone who knows about stop hunts, this would be a nice stop hunt to the downside, I think. But we would definitely need a certain catalyst for that to happen, or anticipate a certain catalyst for that to happen. Of course, you could just take the trade if you wanted to take it and just hope for the best. But I will wait for certain confluences before looking at going short. But as I said, the yen really isn't on my radar when it comes to taking trades at the moment. Looking at the metals, so looking at gold first. Gold just keeps grinding higher, just waiting for a bit more of a pullback if we can get one. Who knows whether you'll get one there. But if prices do, it's been on a bit of a crazy run. So there's always going to be pullbacks, just got to be patient. So if prices do pull back and the Fed is still looking to cut rates, then I think it's going to be a very nice buy. Anyone who like myself buys more on pullbacks than breakouts and buys at highs, we're looking for this type of buy here. So we're looking for value trade, fair value, at least cheaper trades to buy gold. So that would be a nice buy. Same thing with silver. Silver's made new highs, so pullbacks are going to be on the menu. So that's what I'm looking for to continue trading the metals. Now the indices, as I've mentioned many times before, when central banks are looking to cut rates, you typically overall will get the market will go higher and higher, right? It does not say that there's not pullbacks, but overall you should expect this to start to happen. And so yeah, the market should continue to probably grind higher. If it pulls back into one of these areas, then you can look for long trades. Again, I'm more looking for a percentage pullback rather than just a level pullback. So ultimately, I can be patient in terms of just waiting for the best opportunities to go long. But again, that also depends upon what happens and why it's pulling back. If it pulls back and there's no real risk sentiment around it, risk off sentiment, then it's just a pullback, right? And you just look for buy trades. But that's really my plan of action for the S&P. But if you are looking at trades, and of course the pullback into that demand zone or somewhere around here where you've got major support as well within that wide area of demand. So looking at the trade update, so looking at last week, and we had the again the political risk, Ishiba stepping down, and I was only in one position because I'd won two positions already on this. And zooming down into like the the trade. So yeah, I was only in my market order. I'd won 2 trades on this, and when the market opened, it pretty much opened right at where my stop loss was. So I pretty much ended up just taking a full stop out on that trade, but it wasn't necessarily a huge loss. Reason being is because, as I explained last week, what I do is I get heavier, or I increase my position size as prices go against me, right? So if that's 0.1%, then that's 0.2% on my account, and then that's 0.3%, right? So I'm entering at 3 positions. As prices pull back, I'm getting in and I'm doubling up, right? So I won these 2 positions, so that's 0.5% at a 1-to-1. So I only had really 0.1% on left on the trade, and hope and let it kind of swing, right, and add into that if I can. So basically the whole trade was 0.4%, right? Nice trade there for the account. So so that was the trade, and so I'm out of that. Delete that one. The dollar yen. So this was where I nearly got stopped out for break even, but ended up actually making a 1-to-1 trade. So let me go to the daily again. So I'd basically taken this trade here. Again, you can go over it. You can go to last week's video if you want to see the setup. And so prices again dropped on the data. I think it was what was it again? That was the unemployment rate. Non-farms came in, terrible. Unemployment rate came in higher. So we saw this nice drop, and I was thinking, okay, well, I've only got in one position. I'll probably hold it, right? And then of course on the weekend, on the Sunday open, we had the political risk in Japan. So what I did was I moved my stop loss, protect what I've got, all the way down to here. Now, I was thinking that I was going to get stopped out, but didn't, right? And so also one of the things is that I was thinking that this unfair auction, incomplete auction, was going to get filled and get completed, right? So this gap, as they say. But so I basically set a pending order around here. So that ended up being like a 1-to-1 trade, and I thought if it completes that auction, then I'll just get out there, right? So I still had my take profit there, which it did, right? So it came in 9 o'clock. Took it there. My overall trade was about just about a 1-to-1. So that was decent risk reward on that trade. So came close, a few pips to being stopped out on that one. Where was it? Yeah, maybe about 5 pips, but not quite, right? So so that was nice. So I managed to make a profit on that one. I didn't think prices were going to go down further because, of course, who knew, right? But I thought that this had a decent chance of being completed, so set my profit target around here still, and then managed to hit that. So that was profitable. And the Euro New Zealand. So this is this week's trade. Took this on the Friday. By the way, as well, for those of you who are watching who are in the group, if you go to the discussion room, you'll see the trade setup. I was talking about it on the 10th of September. So that was, I think I put out the where was it? 10th of September was like the Wednesday. That was it. Yeah, talking about this trade and stops and targets that I was looking at, and eventually entered on this trade on this here. And this is again what was known as a bit of a stop hunt trade. So you had several touches of a level, and then there was a stop hunt set up on the lower time frame. My entry was here, so I'm only in one position at the moment. I've got a 50% pending buy order and a 95% buy order. So if it comes in and it starts to come a bit lower, then I'll get into those positions, and hopefully we have prices can move to the upside. I do think that the euro is in a better position than the New Zealand dollar in terms of interest rates and monetary policy, although of course there is the French risk, which is always lingering in the background. Hopefully it's not too much, and I can make a profit on this one, right? So that's really the trade ultimately, and let's see what happens going into next week. I'll update you guys. So so that's pretty much it. Hope you all have a great trading week, and I'll see you next week. All the best.